Hello and welcome to the BlockSolid podcast, where we talk about the evolution of the property market, the newest technologies that enhance and revolutionize the world of finance and real estate as we know it, and how we, the owners, the buyers, the inventors, the investors, and the entrepreneurs can benefit from it all. I'm Yael Tamar, CEO and co-founder of Scigala, pioneer startup in real estate tokenization, and I'd like to welcome Joshua Scigala, co-founder of The Standard and the Voltoro.com. Hi.
Hi, good to be here.
Yeah, I'm glad to have you here. And I'm so excited about talking to you about all the current events that are happening, kind of shedding some light on what this FTX disaster has been all about, how we put it in perspective, among all the other types of events that are happening, how crypto got started, where crypto is going to end, if ever, and how we are to adjust our activities and our businesses with this kind of current reality of crypto. That all right for an agenda for today?
That sounds like an amazing agenda. And it's a really important thing to talk about because I feel like there's a lot of people that are very, very frightened in these bear markets, but it's really important to look at the fundamental technology and what has been solved using Nakamoto's consensus and solving the double spend problem in a digital environment.
Exactly. We really should kind of go back to the basics. And before we kind of go into your background and why we're talking specifically to Joshua about these subjects, I just wanted to mention something I had on my mind while you were talking about the importance of going back to the basics. Every time there is a bear market in the traditional stocks and bonds, people are not saying, oh, that's it. I'm not touching Amazon. I'm not touching stocks and bonds anymore, right? I'm not touching fiat. But somehow with crypto, there's this being on the fence, right? Is this going to be major or is this a fad, right? Do you feel that way as well?
Yeah, and especially when the very first Bitcoin exchange collapsed, which was called MtGox, MtGox, the headlines were the CEO of Bitcoin hacks the Bitcoin, and so because it was not understood. And actually, we're seeing the same things now with FTX. Although the media is a lot more they understand Bitcoin is its own thing, but the headlines are similar. It's like, wow, FTX loses billions and billions, and we need to regulate cryptocurrency. Huh?
How about the people that steal and commit fraud?
Right.
Yeah.
I mean, the fraud is already illegal. This is the thing. Everything that Sam Bankman-Fried and co did is already illegal. It's already regulated. You can't make something more illegal, but they should definitely enforce it stronger in these centralized exchanges. But the misnomer that they have to regulate cryptocurrency, it's kind of like saying a bank got robbed, we need to regulate US dollars.
Yeah.
It doesn't, they need to regulate the banks. And that's really important. And I'm seeing that headline a lot lately.
Yeah, I agree with you. I do have a lot of questions in terms of, did they get away with this more than they would have if they, had a traditional exchange? And we'll get back to that in a second. But first and foremost, I understand you were in crypto literally from 2010 or back then in Bitcoin, right? Tell us more about your experience. And also, you mentioned MtGox, and I understand you were also the victim of that collapse. So you've seen those things, all the way through. Give us a quick background of yourself.
Yeah. So basically, I was running the world's first swap site where people swap things like clothes, for instance. And I wanted to find a way to make that better. And money makes that better because swapping is a terrible way of trade. I know it sounds unintuitive. You go in there as a young entrepreneur, you think, I'm going to start. And we started the world's first swap site. But I noticed a lot of deals falling down. Like someone would contact another person and say, hey, I really like that item. Can you look through my items? Is there anything you like? No. And the deal would fall through. And it'd be like, I wonder if I can have some sort of a credit or a token in the system that then that person can use, get that item and now have a credit for the rest of the marketplace. Obviously, you come full circle and to have money again then. So I was trying to figure out, is there some sort of way you can have money without a central authority? And this was back in 2004. So Bitcoin was still not around, nothing was around, but the cypherpunks, the mailing list, were working on this exact problem. And I somehow discovered that. And while I discovered it, I realized also that there wasn't a solution for the double spend problem. It wasn't going to happen. And for me, it was an unsolvable computer science issue. And so I kind of left it and just got on with my life.
What's a double spend problem? And let's explain that.
Yeah, the double spend problem is in the digital space. If I have a JPEG and I send it to you, how do you know I haven't kept a copy, right?
Right.
And so the double spend problem is like, I can double spend my JPEG. I can triple, quadruple, I can million spend it.
Yeah.
So the double spend problem was, how can you take a digital file, a thing, a bit of data, and send it with, and you know that I haven't got it anymore. And this was something that was very, very elusive, and no one really handled how to achieve that apart from Satoshi. And that was really what Satoshi solved using this blockchain mechanism.
Mm-hmm.
And so, I kept my eye out but it wasn't my main focus anymore. And then in 2010, the paper came across my table and I was like, wow, she did it. This is it. This is the double spend problem solved. And so I've really been focused since then on building stuff, and SwapStyle, which was the swap site back then, was the first service pretty much, apart from I wouldn't say first, but it was one of the very first services to have a Bitcoin address that people could put in, and no one used it because they didn't understand what it was. But still, it was in there, and that's how that happened.
That was the beginning. I mean, to me, it sounds like it's less of a double spend problem, really, because you could allocate unique JPEGs with some sort of unique serial numbers, but then how do you regulate how many JPEGs get produced even? So that's kind of, for me, what Bitcoin solves is the treasury issue that's disintermediated, that you don't have a central bank issuing a bunch of JPEGs, but rather a system is doing that on a controlled basis that does not allow for one entity to control the inflation and other things. So for me,
spot on. I couldn't have said it better myself. That's really, really exact, spot on. We can definitely have, and people did have digital money. Like there was eGold and a bunch of others that would keep a centralized database of everybody's holdings and update those. And actually, it's a very normal and good way to do stuff. It's a lot more efficient. And fast. But the problem is you have humans controlling it, and corruption, the ability to be corrupted, which is the whole point of trying to disintermediate. I can't even speak anymore.
Disintermediate.
That's the one. This power structure, and not allow for corruption. And this was the big draw card for me. And I've always enjoyed the philosophies of voluntarism and kind of free markets and anarchy. Understand, for instance, when two people meet, that love is a beautiful anarchy, for example, it's total, no one's controlling anything. When people fall in love, they just fall in love. And when you draw that out into the free market, you can try to solve complex social issues without aggression, without the initiation of the use of force. And that's kind of where Bitcoin steps in.
Interesting. All right, so we're going to have to get back to the topic of love and Bitcoin in a little bit, but I want to get back to the exchanges. And I saw that you predicted the collapse of Terra Luna a few years before it happened. And so, you've been in this industry now for over 12 years, right? Or even before, if you count the years you were running it, kind of looking for Bitcoin and solution. Tell me about kind of how your perspective changes over years with these, critical events, and whether we've seen, these critical events happen way too often and way more often in the last year than before, or is it business as usual?
No, it's always evolving. And philosophically, my philosophy hasn't changed. It starts with a single root, which is don't hit and don't steal. And that's kind of the basis. So if you draw out from first principles like that, that's where you go. But in terms of the space moving, it's been really, really fascinating because Terra Luna wasn't the very first algorithmic stablecoin. There's been many before it, including Dan Larimer's BitShares, there was Waves, there's a whole bunch, and they all failed. And why did they fail? Is because there's a fundamental flaw in its thinking that you can't back a token with fluff. You have to, and this goes back to a lot of like Austrian economists or old school economists that think about the gold standard and having backing to currency. And that's what the gold standard was. And that's why we're called the standard.io, for instance, is that You want a backing of hard assets, of real value, and then you can issue currency from that. And so what these did, and why I'm not some sort of genius that could tell why Terra Luna would collapse and why I warned people, is basically because it happened multiple times before, and Terra Luna wasn't new. They were just doing the same thing that had been done before, and it didn't work. So I think what really needs to happen is, more like podcasts like this are fantastic because it educates the market of like, hey, this has happened before. Keep a lookout. Don't just follow promises from people. But what's beautiful about this space and why it's evolving is that people can test economic theory because, hey, maybe an algorithmic stablecoin does work if it's done in some sort of way that we don't know yet. In the traditional mechanism of money, a state would have to force with violence or the threat of violence a certain geographical region to use a particular monetary policy. So for instance, Marxism, and if you look, you have the gulags in Russia to enforce communist philosophy for a while, to test it, and it failed and it collapsed. Or Venezuela right now, it's almost impossible for Venezuelans to get passports to leave Venezuela. So they sort of trap you. East Germany as well, East Berlin, when Russians took there, it was sort of, they were trapped, with that wall. So the blockchain space, what the crypto space allows is people to try economic theory voluntarily and test things out. Now, this is why you have these huge calamities, because sometimes people just rush in blindly without any sort of education into what's going on and what it is. They just see a return, an APY, and go, oh, 20% APY, 30, 50% APY, I'm in. And they think thousands of people can't be wrong. Yeah, this sort of following the crowd mentality that needs questioned by people, and sort of going back to basics of what is money, why do we need certain types of money, and what constitutes solid money. And something like what you guys are building, Solid Block, being tokenizing real world assets, that's a really strong value proposition for real money, because what you're doing is you're taking actual value and bringing it as a non-fungible, I'm guessing, into the space. That's really interesting.
Yeah, absolutely. So I agree with you about backing. The only way for this decentralized stablecoin solutions or centralized to work is to be backed by actual real assets that exist in the real world. But I'm curious about what's different about the standard than any other lending solution in stablecoin.
Yeah. So the standard takes a few things to we stood back and we thought, right, what is actually needed in the space for a truly over-collateralized stablecoin to work? And the one thing that the few premises that we wanted was that there was no interest rate at the base level of money, that when people locked up assets and then issued themselves stablecoins, there wasn't an interest attached to that. So 0% interest, as well as being fixed. So this is really, really a great mechanism, for instance, for people to hedge inflation in the real world. Because if people take out debt, the inflation actually works for you because it's paying off the debt if it's a fixed interest. So that was one thing that we wanted to look at. The second thing we thought is everything's focused on the USD. Now, this is interesting, but it's also important to question why that is and to allow for, as this industry moves forward, more and more people will want to work in the metaverse or in cyberspace, in the digital realm, and they want to get paid in their local currency. They want to send an invoice in Indian rupee, in shekel, and actually be paid in that stablecoin equivalent, because they understand it's also very, very easy to account for then, because I think accountants have massive issues with people invoicing in Bitcoin or Ethereum and the price is fluctuating and what was it there, or they're invoicing in USD and then they have to do the price conversion. It just adds a whole lot of overhead to the accountancy process. So that was another thing that Standard really focuses on, is having multiple like a mirror for every major fiat. And the other thing was to really look at when people issue themselves debt. So how it works for the listeners don't know, the grand vision is that people will be able to lock up assets into a smart contract that they control the keys to. So no one like Celsius can run off and speculate with your funds, or a bank. You have the keys to your private smart vault, and you can lock up assets and then mint stable cryptocurrencies from that value. And all to get that value out, and you can't mint all that value, maybe half of the value or 80% of it. But if you want to get that full value out, you just need to pay back that loan, send back those stable coins, and then you can unlock that value. So one of the things that people can see in bear markets is that they have a loan that they've got themselves into and they've maybe lost their job or something and they can't pay it back, but they've got more value locked in that we're looking at a way to basically take that debt that you owe yourself and sell it as an NFT, so that somebody else can buy that debt off of you and pay it off and take the collateral out. So that's also one thing we're looking at. The other thing we're looking at is auto collateral swaps, like being able to trade the collateral within the smart contract that's locked in there. So if you've got a bunch of collateral locked in there and the market's sinking like crazy, that you can trade it to like a tokenized gold or something like that, that is on a different track than crypto. So if crypto is doing this, gold might be doing this. It's a lot more stable. And that's also one of the things that we're working on. Yeah.
Yeah. Wow. Super, super interesting. All right. Let's get back to the FTX for a minute. So I'm just wondering, was it something that they've been doing for a while or just last year? So the authorities didn't have a chance to get involved. Did they provide, as they were supposed to, all the audited statements, and then they just had fraudulent or corrupt accountants? Like, do we even know what's happening, or we'll only find out after they investigate?
I think we'll only really find out. There's a lot of information being trickled out, but this world is full of disinformation. And, there was a lot of political play in this. And whenever there's political play, you'll also get political interests trying to smear the other side by, really ramping up something or adding some disinformation. So you don't know what's real until auditors come in. And actually, some of the stuff that we do realize, though, there's some information that is absolutely concrete. And Sam was using customer funds, and funneling it through Alameda to basically create funny money, and then printing FTT token and using all this, and then using that as political clout, and also having some sort of clout with the SEC there to get, and that's already on paper that's come out that he got a non-action event happening through the SEC. So they knew something was dodgy, but no action was taken. And
wow, that is interesting. I wonder, in general, does crypto by nature attract more fraud and scam and, shady stuff?
I don't think so. I think wherever real value is. So the gold industry has had 5,000 years of scams, but it's figured out how to deal with those scams, right?
Wow, good point. How many people, like gold from just the get-go, just being able to, inject it with other materials, and there you go, right?
Yep.
At least you cannot do that with
all sorts and a fractional reserve. And, we got tons of scams with gold. And
wow.
Really, where do scammers go? Where do people go when they want to extract value? Well, first, they need something that's actually valuable. Mm-hmm. Now, they come to Bitcoin because there's a big learning curve for people. The UX, the UI isn't good yet to spot things. So you can easily log into a site with MetaMask and give access to a site that's saying that they're going to give you an airdrop. And really, when you sign, you don't read the thing that says, you're giving access to your MetaMask to this site to send all your crypto out. So these sorts of things need to get figured out. But yes, I don't feel that this is particularly a space where our scammers want to come because they just love cryptocurrency. I think they come because cryptocurrency has value.
Understand. So perhaps cryptocurrency may attract this kind of activity because it's new, right? A lot of people still fall prey to all kinds of different scams. But what you do not expect, what the authorities and the regulators are telling you, okay, go to the regulated entities, regulated exchanges, and things like that, right? That's what I think is difficult for people to grasp, is like, who do we trust, right?
Yeah, I really feel this, that governments around the world have protected people so much from scams over the years by not allowing people to invest in startups, for instance, unless you're an accredited investor and stuff. Now, there's good reasons for that. I'm not saying that it's come from malice, but what's happened is that all that normal people are allowed to do is go to like slot machines or the casino or bet on the dogs or the horses, the lotto. So scratchy cards, like these sorts of things, but they're not allowed to invest in a startup. Well, they're not allowed to be marketed to, let's put it that way. So what's happened is that feel that when people get into crypto, obviously they get into Wild West, where there's all sorts of ads and people telling you stuff on YouTube and Twitter comments saying, send me 1 Bitcoin and I'll send you 2 back. And people actually fall for this stuff because they've been so protected. So, podcasts like yourself are really important to educate people into what scams look like, what things to look out for. And so it's one of these things that tend to happen. But for instance, there's a new scam that I'm seeing a lot lately where there's a tweet saying, wow, I can't believe why is no one talking about this? And then it's a video tutorial, a coding video tutorial telling you how to code an arbitrage bot. So you need a little bit of sophistication already in terms of to understand, to want to follow this. But basically then they make you install some sort of, software and that steals your Bitcoin. So yeah.
That's been done with all kinds of things, right? Like we've been around for a while. So I've seen all these phishing attempts and even way before crypto. And even like when I was 7 years old and I went on a train with my mother, well, she'll kill me if she ever hears this, but let's hope not. Yeah. And we stopped at a certain station and there were people playing with, actually, it's funny. I have a thing here, a dice, right? A die. So people were just literally having cups and a die, and we lost so much money. I don't know why she handed them the money. Just, I would have walked away maybe, but you owe us now loads of money because you lost, right? So the age-old scam. Yeah, and I'm actually just talking right now on WhatsApp as we're doing this podcast, guilty as charged, to a scammer that contacted me today, saying that they want to invest in our startup. There's a website saying, yeah. So this happens every week. And usually it's a hobby of mine. I'm just basically kind of talking to them and then reporting them, right? So trying to get their phone number and then reporting it further.
That's a tricky one. And we've seen all those as startup founders as well, because startup founders are kind of desperate for funding sometimes, as they're like, oh, we need money to keep on going. We've put everything in, and scammers will take advantage of this as well. So I really feel that one of the dangers of the society we live in right now, and it's only just starting, is that AI is becoming so extraordinarily good that you do not know if you're talking to a robot. So scammers can scale massively now. And so this is very, very dangerous. So yeah, keep your wits about you. If it sounds too good to be true, then look into it more and more and more, and always be skeptical. It's really, really important.
Yeah, absolutely. Yeah, but I genuinely think that the crypto industry is contributing so much to the society, to the technology, to the evolution of money, to people's understanding how money works, even, right? The education about the current system. So, in my mind, there's no doubt that also with a connection of two things, really, the internet and the social media and blockchain and Bitcoin technology, that's what's causing the proliferation of, and also kind of the acceleration of all these events that, no matter how stressful, are helping us move forward, right? Helping us move forward with creating the appropriate regulation, or, like you said, enforcement, right? We need more enforcement and maybe more proactive approach. And I wouldn't even mind to have more enforcement in the crypto industry when it comes to exchanges, because all of us that are in the crypto industry, we have money on different exchanges and we are susceptible to these risks. So I wouldn't mind personally more enforcement.
Me either, but this is the beautiful thing about DeFi. Decentralized finance and specifically decentralized exchanges allow you to trade without the custodianship, without trusting third-party custodians. And as blockchains get better, especially there's great Israeli firms like Starknet that are building layer 2s, Ethereum, that will allow for really fast transactions and have order book exchanges even as a decentralized system. So we can send crypto into a smart contract, and that is the custodian, and only you have keys to that. So this is really, really fascinating work being done. And by the way, Israeli people have been a big part in the history of crypto. There's Colored Coin and Kalu came out of Israel. They developed pretty much the first NFTs. but it was on Bitcoin. And this was amazing. The ability to tokenize stuff back then on Kalu was sensational. They tried to build microeconomies within little suburbs and things like this. Really awesome work. This is what I'm talking about when I mean we get to experiment with economical theory without gulags and violence, but people will along the way lose money. I mean, I've lost so much money, more than most people will earn in multiple lifetimes through like different exchange hacks and stuff. But this is just part and parcel of this really, really experimental stage. And this is why the young usually get into this, because they can afford to re-earn stuff. And why, it's very important that maybe the elderly shouldn't, be doing very, very risky things. Saying that, I think in this time with this global inflation that we're seeing, I also don't think it's very sensible for the elderly to be keeping their money in banks, because the whole thing is always don't put money into Bitcoin that you can't afford to lose. I would say the same thing goes to banks. Don't put money in banks that you can't afford to lose. But you also don't want to store money at home. And we saw during the Greek financial crisis, there was a lot of home invasions because everyone was storing money at home. So the likelihood to find cash would be pretty high. So what do you do? And I think this is where like gold vaulting facilities still play a role in this current climate, where if you can have a solid, good, professional, high security vaulting facility that's fully insured and fully audited by a large auditing firm, can be a very good option for people that are a bit elderly to maybe hedge a little bit of global financial risk outside of, cryptocurrencies, so to speak.
Yeah. And that's why I personally really like using real estate as a base asset, because, it's kind of hard to steal a building. You could steal a title in different countries, which are less stable, but in Western countries like the US or the EU countries, title is relatively safe. And actually, that's why I am kind of on the fence today, whether or not the title should be on the blockchain. Frankly, I was one of the bigger proponents of that, back in 2017. And I went to Africa to help them establish the title on the blockchain. Actually, it's to Somaliland. But actually, I think paradoxically, it really depends on what you have today and what blockchain is the alternative to, right? So if in Africa, for example, a government will change, so they'll go and they'll change all the documents, or if an archive burns down and stuff like that, right? So in the US, you have a bunch of backups, data, and then printed, and then you have title insurance and, a bunch of other things. But in Africa, you don't have that. So actually a blockchain that is in a way public, and at least you see different changes that are made, would be a better alternative. In the Western world, to be able to replace the archive with blockchain-based, we need to have all kinds of considerations. But on the other hand, you could have two systems coexist, and which is what I think is done by different companies like Propi, for example.
Yeah, I totally agree. And I read a really fascinating study where it looked into poverty and countries that were consistently in poverty. And why those reasons was it cultural? Were they just lazy, these people? Did they, why? And what it came down to in the abstract at the end was actually, it was that the fact that their property rights, the ability to have private property in terms of real estate, was very, very weak. So a farmer wouldn't bother putting a lot of energy into making the land good. Now that belongs to me. So having very, very strong real estate property rights and the ability for private ownership was one of the big markers, by far one of the biggest markers into how generations become wealthier, because you actually bother putting work and toil the land. So I absolutely agree. And with the standard, what I would really love is, because it's a DAO, the DAO participants will vote on new collateral types. So something like tokenized real estate, just like an NFT on a single house, is too illiquid to use as thing. But if there's a whole bunch of real estate, then that would definitely work. And so being able to say you own some property that's within like a big mechanism, you could then tokenize that and borrow against it without using a bank. And this is just extraordinary. It just has so much potential, especially when it comes to something like breaking that poverty cycle. A lot of people in the poverty cycle, they don't earn enough to save. So they just always just enough to get by. And if you could rather save into a smart contract and then borrow what you needed, it's over collateralized. So you do need a little bit more, but it's like a forced savings. And if it does get liquidated, well, you would have had to sell it anyway, but at least it gives you a chance to borrow, to have what you want and then borrow from yourself without a third party. I think that really is an amazing thing that DeFi is bringing to the market. And it goes back to why a lot of early Bitcoiners got into Bitcoin. It was that the whole concept of unbanking the banked and banking the unbanked, allowing especially the unbanked to participate in the global marketplace. But also, we didn't think of these sorts of mechanisms really early on. But this is what smart contracts through Ethereum have allowed us to start to orchestrate and engineer.
Yeah, absolutely. It's so fascinating. And I feel like we should have a whole other conversation on that, but maybe in the future. Right?
Definitely. I'm always keen to come back. One thing I wanted to add was how we're with the standard, how we're actually making a 0% is by allowing people to build a full liquidity pool. And that liquidity pool will always be used as a stability pool almost. So it's a smart contract that will always buy back 1 S euro for 1 euro or 1 S shekel for 1 shekel worth of Ethereum. And so what you would do is you would put an S stands for standard. Mm-hmm. So what people do, how we're launching on the 28th is people would send, let's say, 100 euro worth of Ethereum into the smart contract, and they buy the first S euro. This is the first minting of the S euro at a discount, so at 20% discount. So they get the first euro for 80 cents. And when they have that instantly in their MetaMask, because it's not a stable coin then, because it's 80 cents, right? So no one's going to accept it in the world for 1 euro yet. But it's like the launching mechanism. And as this liquidity pool fills up, what will happen is that the discount becomes less and less over time until we reach a 1-to-1 to the euro. And then we'll be doing that with USD, with shekel, with Indian rupee, Turkish lira, all of them. But the second stage to that is, it's going to be slightly under collateralized if people have bought it at a discount. So what people can instantly do while they're waiting for that discount curve to reach 1-to-1 is they can insert that as liquidity into Uniswap and sell us that liquidity for the value of actually 1 euro. So that's how you can realize those gains. And so these sort of yield farming opportunities are also really, really interesting. They're a great way of launching the stablecoin because it builds this big liquidity pool. And that way, when people borrow from themselves, we don't need to use interest rates to manipulate the stability of the currency. We can just have a large pool that is always buying back for 99 cents and selling for 101. Or that's a 200 basis point spread. But if we close, that could be closed really quite small as well. So by having that stability pool, we don't need to use the leverage of interest rates. And this is what traditional DeFi over collateralized stablecoins have used. Have used the same mechanism as central banks with interest rates. And I just don't find interest to be a great thing for the base level of money. And there's a lot of religions that don't like usury around the world or interest. I actually don't find there's a problem with interest on a personal level. Like if I was to lend you money, then I have opportunity costs. And that's to me totally moral and normal because I can't spend that money on anything else. But if you have interest on the base level of money, if a central bank can issue money out of thin air and ask interest for that, that's the problem. And so I see that emulation too close in the current stablecoin scenario. So what we're really working towards is the ability to mint stable cryptocurrencies with zero fixed interest, 0%, and use that stability pool that we launch stablecoins with as the main pegging mechanism.
Yeah. Okay. Sounds awesome. All right. Before we wrap up, you started to tell me about your background before we ran with the podcast, and that was super interesting to me. So do you want to give like a quick overview of where you're born, what you call home, where you grew up?
I was born in Berlin, and my grandmother was Jewish, born in an orphanage. And she then throughout the war, there was a lot of documents lost. We don't know really what happened there. But then my father was born from her, and he was born stateless because they didn't know his father.
Mm-hmm.
And so my father was stateless as well. Then when I was born, I inherited that statelessness.
Wow.
So we didn't have father. We didn't know where to go yet. My father was at the Ausländerbehörde speaking perfect German, helping everyone, with their documents. Also an Ausländer. But yeah, then my mother got me a British passport because she was from Ireland. Then we migrated to Australia. And then I'm back in Berlin for the last 10 years because I wanted to spend some time with my father. And the interesting thing about statelessness is I feel like a born anarchist from day one, is that the concept of anarchy is really important when you think that has a very bad connotation. But actually, it just means no rulers. It doesn't mean no rules.
Interesting.
And this is
organized.
Yeah, this is why DeFi is so beautiful. It has a lot of rules that are hard-coded and explicit. But has no ruler. You can voluntarily join something, a smart contract that has rules written, but you don't need to. And this is really what voluntarism is all about, is the ability to voluntarily interact with certain regulations. And this mathematics are regulations. It's a regulation so hard that nobody can cheat it because it's math. It's mathematics. You can't obscure natural law, which is mathematics.
Yeah, matrix. I love it. So first of all, thank you so much for coming on. You've been awesome. We'll do this again.
Thank you. It's been an absolute pleasure.
Yeah. So we'll have this on Spotify and Apple Podcasts. So you can see the podcast there or at solidblock.co/podcast. If you enjoyed the show, don't forget to rate, review, and spread the word. And of course, check Joshua's projects, right? Which are the standard.io and vaultoro.com. So,
yeah.
All right. Thank you so much. Have a great day.